Hello, I'm Adam from Market Life. One of the questions we get is how do you think about, and then fill in the blank, whatever macro event you're thinking about. Could be the US elections, could be right now the new coronavirus wave, could be a vaccine, good things, bad things, political things, just all of these questions. How do we think about these things? And the answer is, in most cases, we don't. We're able to trade patterns which show us where it shows us how the forces align in the market, tells us how to manage our trades, and that's all we need. So this question came up in a trade room that we did for our members on October 8th, 2020, and I just thought we would share a few minutes of that so you could hear my thinking, my rambling about the topic, and I hope this gives you some insight into how we think about these things and a structure and a way that has been very useful to me for many, many years.
Is there potential for good trades around the upcoming election? Will it affect the way you trade? Short answer to that is that I view this for the whole world, and more particularly the US, but everything's kind of connected. It is equivalent to a stock reporting earnings in some ways, not entirely. So what do I mean? Well, when a stock reports earnings, we know that there is likely to be, not certainly, but we know there's likely to be a big volatile move. And you don't know how far, you don't know in which direction. So it makes sense to not go into earnings with a very heavy exposure in an individual stock. And just, I think most of you know, but for currency people, stocks in the U.S. report earnings 4 times a year, where they give financial history, they tell how well the company is doing, and they make predictions about the future, and that can really change the picture for a stock. If a company comes out and says, "Oh, we aren't doing so well," the stock may sell off for weeks and weeks and weeks, and on that earnings event may make a gigantic move. You might see a move 5, 6, 8 times the average move, which, by the way, when I was pointing out that currencies don't have the same volatility variation, this is one reason why, because earnings are a repeated volatility impact for stocks. So if this is going to happen with the election, that it could change the picture for the economy. But one thing that I avoid with news events like this, I avoid trading the news. I don't think anybody can do this with any degree of reliability. And if you've been paying attention, macro trading, global macro funds were all the rage 10 years ago. And the performance of those funds on balance has not been impressive. And so today, there aren't so many people who would brand themselves as global macro funds. What a global macro fund would have done is they would have put a bunch of smart people in a room, and they would have figured out anything. They would have figured out anything from political developments of new technology, and they would have placed trades based on that. And the ones who survived a little bit, very interesting, because we had and have still some of these as clients. They also started incorporating a lot of technicals into their process. So they were taking cues from the market, which was a big part of risk management success. But I think the way to think about this is perhaps to look to reduce exposure into the event, because even if you correctly predict the outcome of the election, which I don't think can be done with any reliability, you might get the market reaction wrong. And this is something, it's just another way to be wrong. You might say, if candidate A is elected, the market will go up. And you can be wrong in 2 ways there, right? Maybe candidate B is elected, you're obviously wrong there. But maybe candidate A is elected, so you correctly predicted the event, and then the market goes down and you got the market reaction wrong. These things are not slam dunks, and they're always incredibly obvious after the fact. And a lot of people, if you go on places like Seeking Alpha and you see a lot of people writing with authority, what they're doing is looking at things that have happened in the past and explaining how it was obvious in the past, but it wasn't obvious at the time in many cases. So Cody, short answer to your question is I probably won't be we probably won't be doing what you might think we were doing, right? You might think that we were looking into the crystal ball or setting up some kind of trade. And options implied volatility is already pumped a little bit, in some cases a lot, into the election. So the world is already anticipating volatility. So you don't even really have an edge to say, let me go buy a volatility product because I think the market's going to make a big move. I don't know in which direction. That's also a difficult trade to make. So what we'll do is the same thing we've done with every election. What we'll lighten up before the event, and then we'll trade the price action following. And you'll get to see that in real time as we get closer here. So it's a good question. I wish